Now let's have a look at the low test and high test candles. You can have bearish and bullish low tests and bearish and bullish high tests, and they'll look like this. This here is your bullish low test. This here is your bearish low test. And this here will be your bullish high test and your bearish high test. So what this means is that momentum has come in either upwards for a high test or downwards for a low test. So for a high test, you had a lot of bullish momentum come in and push the market up, and it essentially tested an area, whether it be a support and resistance or a trend line or whatever support and resistance there was that it tested, and it didn't win the battle. It went back down and closed way below the high, extreme high of that wick, that candle's wick. And it's the opposite for the low test. So low test and high test candles are a pretty strong indicator of a reversal coming, either a reversal of a trend or a turnaround in a pullback. So this candlestick opened in that level there. The bears came in and pushed it down, 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 and then they lost the battle. It came back up and it actually surpassed where it opened and closed as a bullish low test candle there. So that's a strong indication that the bulls are coming in with a lot of backup there and ready for some bullish momentum to be injected into that market there. So if we scroll back a little bit to this time frame here, you can actually see that there's a low test candle here, but it's actually a bearish low test candle. So whether it's a bearish or bullish, it has a little bit of weight to it, but you can have either of them and it's still being a pretty significant sign of reversal. Now, the low test candle or high test candle, what it essentially means is it's testing support and resistance levels, or testing an area there that has strong support and resistance, and it's not wanting to pull, it just doesn't have the power to push through that barrier. So for example, you could have here, let's say for example, a really strong trend line that it's rejecting. You can actually have a really strong, option H is a horizontal line, by the way. You can have a really strong horizontal line there that it might be rejecting. You could have a zone that it's rejecting there, so a certain price zone, for instance, that it's rejecting. You can have 50 EMAs, 20 EMAs. You could have the Fibonacci, say, retracements. You can have all these levels that it's rejecting, that it can either build up and stack your confluence, like we'll learn in the lessons to come, or if you just look at price action itself and you just look at the candlestick itself, you can see that just by looking at the candlestick itself, you already have a sign here that something's about to happen. In this case, it was just the sign of that the trend is continuing, so it's just the finishing off of the little pullback that it did. So high tests and low tests are normally either the end of a trend, indicating it's ready for a change of direction in the trend, or it's at the end at the end of a run. So over here, the trend has continued, it's made a little pullback and then continued. So it's just indicating that this little pullback has come to an end and it's ready to continue the trend of the market. So I'm not going to waste your time with an example of a bullish high test or bearish high test, because it's exactly the same, it's just opposite. It's testing the top of a market, it's testing support and resistance at a higher point instead of a lower point. So it's the exact same thing, just in reversal. You're going to be seeing them a lot. They are one of the stronger reversal candlestick patterns. And next, we'll look at the tweezer top and tweezer bottoms.